And now a conversation with Kef Kasdin, the founding general partner of Battelle Ventures.
Kef, welcome to the show.
Hi, Rich.
I'm sure a lot of our viewers are out there who are engineers, entrepreneurs, and potentially some female engineers out there would like to know how you migrated into the venture capital world, which is really an inner sanctum for men generally. So tell us a little bit about your history in your career and how you got to where you are today.
As you mentioned, I have an engineering undergraduate degree, and after that I actually did not practice engineering. My first job out of college was as a consultant, a management consultant. And after spending a couple of years doing that, I went and got my MBA and continued in management consulting for another year after I finished my MBA. And then I worked at 3Com Corporation for about 9 years. So I went into 3Com as a product manager, someone who dealt with product specs and marketing issues, worked closely with the engineers as well as with the manufacturing folks. And from that I moved into higher level marketing roles and moved from that into running a business for 3Com, a division, as a general manager. It was about $1 billion business. It was after I left 3Com and actually moved to the East Coast that I started getting involved in venture capital, and I did that first by consulting with some startup companies in New Jersey, and then we formed Battelle Ventures in 2003.
Well, that's great, because there is no normal traditional route to become a venture capitalist. Let's hear your definition of what venture capital is and how it differs from other forms of equity capital investments that may be made by angels or state governments or other organizations.
So the easiest way to explain it is venture capital. So let's take the capital part first. So it involves money. It involves investing money in a company. Right. For a venture capitalist, what the venture capitalist gets is stock in the company. That stock is not liquid. Typically. Now, there are some venture funds that will invest in publicly traded companies. We don't, and most of the venture capital industry doesn't. So that's one distinguishing factor is you could have private equity firms that actually invest in the public markets or other things. We really focus on private capital. We focus on investing in companies and getting stock that we hold, but that doesn't actually, there's no marketplace where you could exchange that stock and get anything for it.
So let's talk about criteria.
Sure.
Well, I'm an engineer, I'm an entrepreneur, I'm a faculty member, I'm a scientist at a lab or whatever. What is the criteria that you must have in your deal selection to, number one, even get in the door for you to look at something? And then what is the final criteria you need to have in order to actually make a decision to invest? The
way I coach people is think about it as solving a problem. It's sort of the way we approached going back into the labs. So what problem are you solving? Start with that. And it needs to be a big problem. In other words, something that's going to have a big market behind it and therefore big opportunity to grow. So first of all, there's got to be a problem you're solving that somebody really wants to solve. So the other thing is not something that would be nice to solve, but something that's it's a real pain for that market sector, for that customer who eventually is going to buy the product or service. So there's got to be a problem, and then, but the other piece of it is then you as the engineer, the innovator, need to have come up with a solution that is significantly better than what already exists. Because if only marginally better, incrementally better, why would somebody switch? Why would they take a risk with you with something unproven and unknown when what they've been doing is, okay, they have this pain, they have this problem, but it's sort of working okay. And if you're not offering them something significantly better, they're probably not going to switch. So there has to be a significant problem that's a big market, and you need to have a significantly better answer to that problem, and you need to convince me of that. So those are the first two things. And
how do you define big market, by the way?
Because we're a smaller fund, we don't maybe need to have quite the huge markets that some of the bigger funds have. The way we look at it is, can you build a business that's it could be valued in the hundreds of millions of dollars? So that means, can you build a business where you're generating 20 to 50 million in revenues at least in the next, say, 5 years. The bar's actually gone higher, so we might be talking more like 100 million in revenues. where a lot of companies stumble is actually not on the technology. It's on how do you actually get to the market and how do you execute on the plan. And our best proxy for, because we can't predict how a team will execute, but our best proxy for that is, have you done it before? Or how much do you know about that market? Can you really convince me that you're going to be able to figure out how to get to that customer, how you're going to be able to break through all the other things they're dealing with, including all their existing solutions. And so in my view, having experience, having done it before, both from a business perspective and a technology perspective is important. So if you're lucky enough to be able to marry the two in one person and be an entrepreneur who's done this before but have the real technology underpinnings, terrific.
Oh, now let's talk about elevator pitches.
So I have a funny story actually, because I actually was once delivered a true elevator pitch in an elevator. Right. But the notion of the reason why it's called an elevator pitch is hone your message down to the point where you can deliver it while riding in the elevator up with somebody. And this actually happened to me once at a venture conference. I had a name tag that clearly identified me as somebody with money, and I was taking a break to go up to my room for something, and I think I was on the 10th floor. And I get in the elevator, and these two guys come in too, and they're entrepreneurs, and they look at my name tag, and they say, great, what floor are you going to? 10th floor. Okay, we're going to tell you our story. And they did. And they managed in the time it took to get from the basement to the 10th floor to give me the message about what problem they're solving, why they're different, what expertise they had to go after it. So I ended up not investing in the company, but it really stuck with me. So this was a long time ago. That you can do it. You can figure out how to get your message crisply down. Think of it as the trailer to a movie. You don't have to give away everything. The point is just to tease somebody enough that they want to see the rest of the movie.
Okay.
And then hopefully then you get an audience and you get a chance to have a 1 or 2 hour meeting to really go into the details. But so look for all those kinds of ways to get in front of a VC and then make your message really succinct. VCs are busy people, and the more you can get your message across in a very short period of time, the better off you're going to be.
So 6 degrees of separation doesn't work. It's got to be 1 to 2, right? I mean, you got to have some of this direct interaction, or find some way to get directly
Find someone who
interactive.
can get you in the door. Yeah.
It's great tips, great way to close this segment. And I want to thank Kef Kasdin, General Partner with Battelle Ventures, for coming on ASME Innovates today. And we hope that you fund many engineers in the future, Kef.
Thank you. Thanks a lot.
Thank you.